Hi, Luke Fannin here from Athlone Institute of Technology School of Business, and we're going to look at another bank reconciliation question. Once again, three requirements: reconcile the opening balances, complete the adjusted cash book or bank T account, and then prepare an adjusted bank statement or reconciliation statement. So this is the cash book, this T account here, or it's also known as the bank T account, and this is the bank statement. So we have to reconcile the opening balance of 260 here with this opening balance here of 220. Then we have to complete the adjusted cash book, which means the closing balance is 1565 down here, and to redo that, adjust that, and then the bank reconciliation statement, we're going to adjust this closing balance for any items not yet presented for payment or anything not processed yet by the bank. So to do it, our starting point really is the opening balances, and we'll get them reconciled first. So the opening balance on the credit side here of 220, that's a minus 220 if it's on the credit side. We don't have pluses or minuses in the T account, so that's why, but if it's on the credit side it's like a minus. And here there's a minus 260. So your format generally looks the same. Here's your opening bank rec. So it's going to look like this, the template. And we've got our opening balance, which always you start with the bank statement, and the opening balance here is minus 260. Then we take away any checks relating to prior periods. And how we know this, we're in February now, so any period before February is January, December, November. But in February, Joe Benson here was using his checkbook, and he started on check 86 and then went on, and they're in consecutive order. So any number that we see in the bank statement before 86 we know is from a previous month, such as January or December. So we come down here, 86, 88, 75, 90, this guy here, check 75, this 120, that's an example of a check from a previous period or a prior period. So we take that away. So that 260 really needs to be reduced by 120 because that 120 relates to a previous month. So we're going to put in 120, and that just makes that two minuses bigger. So we had a bad negative position, now our negative position has got worse, so we're left now with minus 380. We're reconciling this 260 to 220 here. So we want to reconcile those two amounts. So we want to finish up with the opening balance for the T count is 220. So the difference between 220 and 380 is 160. So hopefully there's a lodgement of 160 at the start of the month. And here we've lodgement GG 160. And we can see here that in February we had a number of lodgements, and PT, XT, AQ, we had no lodgement. GG is at the start of February, so it's a lodgement that was lodged probably by Joe Benson at the end of January and just wasn't processed by the bank. So that 160 gets included here, and 360 minus 380 plus 160 will give you minus 220. Now we're reconciled, and we can cross these amounts off as reconciled. Now we're in a position to do part B and C, and it doesn't matter which order you do them in. There's the adjusted bank T account, and there's the adjusted bank statement. But before you do either, you need to match off the accounts. So check 86 here, I always start on the T account. Check 86 is 540 here, it's 538, so we always assume the bank statement is correct. So here there was the what was paid out was 538. We wrote 540, or recorded 540. Joe Benson recorded 540, so that needs to be reduced by 2. Check 87 I don't see. Check 88 is down here, so I don't see any check 87. Check 88 is down here. It matches. Is there check 89? I don't see it. Check 90 is here for 870 versus 870. Bank charges are 40 and here they're 60, so Joe Benson might have made a guess at the bank charges. In reality they were 60, so he needs to increase them here by 20. And here we've check 91, which isn't down here. This lodgement matches here. 5th of February and the 5th of February. Lodgement PT was for 350 on the 13th of February. And the two of them together add up to 350. So 210 and 140. So that together matches that 350. Lodgement XT is 540 versus 540. And then AQ, Joe Benson has recorded 760. In reality, it was only 755. So that needs to be reduced by -5. I'm going to take away this 350 because it's going to confuse things. And then I'm going to cross out that, and we've nothing then for the 240. So anything we didn't find a match for, check 87, check 89, and check 91. And down here there was a dividend and a credit transfer money in, amounts lodged into the account. They should have been recorded in the debit side, but they weren't. And here we have a standing order money out of 110, and that should have been recorded on this side of the bank T account as money out, but it wasn't. So now we're in a position to do our adjusted bank statement and our adjusted T account. I'm going to do the bank statement first because it's easiest, and how to do that is it starts here. So your starting point is your closing balance 283, and all you do is put in the amounts that were recorded in the T account and didn't get processed yet or presented for payment. So check 87, that's a -600, it's going to be money out. Check 89 is -535. And check 91 hasn't been presented for payment yet, but it will be. So if we want to just, for our own records, adjust the bank statement to show what money really we know is there, we need to reflect these checks that have been written but haven't been paid out yet. And also this lodgement of 240 is going to be plus. And that's our new adjusted bank statement. Okay, that's a bit of a better attempt. And if we were to add them up, so the easiest way, we've one positive amount, 240, minus 150, minus 535, minus 600, minus 283, 1328. Is the new balance on the adjusted bank statement, and that's going to look like the following. If you were to, so just write the headings in, and it's always going to be closing balance per bank statement, which here is 283, minus less checks not yet presented, so there could be 2 or 3 or 5, you just list them down, they're always minuses, and lodgement not processed gets in there, and then we just add them up and we get 1328, and that's the adjusted bank statement. And now we adjust the bank T account, and that is relatively simple as well. It should show the balance bought down. It didn't in this, but the balance bought down was 1, 5, 65. So at the end of the month, at the 28th of February, can't talk and write at the same time, the credit side was bigger than the debit side by 1565, so it was in bank overdraft. And now we do our adjustments. So we'll start here. Check 86 needs to be reduced by -2, so the credit side needs to be reduced by 2. We can't do minus, so if you see minus, you put the adjustment in on the other side and just change the sign. So the 2 goes here. The 20 bank charges should have been 60, so we need to increase the debit side by 20, so the 20 goes here. And on this side there's only one adjustment of 5, that should have been 755, so we need to reduce the debit side by 5. We can't put in a minus, the only thing we can do is put the 5 on the other side. And then we have 3 items that went through the bank statement were now recorded in the T account. So the standing order money out, go 110. And then we 2 money in transactions with a dividend of 170, so we put that in on the debit side or the left hand side. And there's 200 here. Now you put descriptions and dates, but for this rough work I'm not going to bother. So that's our new T account. And then when we balance it off, and how we balance it off is we add up, this side is obviously bigger, so we're going to add up this side, take away the debit side. So on the credit side is 1565 plus 20 plus 5 plus 110. That is up to 1700, and hopefully when we take away this we're going to get 1328. So -2 minus 170 minus 200 is 1328. I think I've gone over the the line that's an 8, and that's on the credit side. So, and what that means is if it's on the credit side it's like a minus, so then these guys match then, which is what we want. When we adjust our bank statement we get -1328, when we adjust our T account we get a credit of 1328, so they match. And I'll just show you how that looks if you were to write it out properly. So you'll do the T account, you'll put in the closing balance, the balance bought down of 1565, which we get, it wasn't on this, but you always bring the balance carry down, it always gets bought down on the other side, 1565. And then the other things we talked about get populated into the T account. When we're done, you balance off the T account, add up both sides. So the credit side is bigger. The credit side is bigger than the debit side. If we take 1700 minus 372, we get 1328. So the credit side is bigger. So the adjusted balance brought down is 1328 at the end of February. We're in February, are we? 28th of February. And then to finish it off, bring up the balance carry down, which is the same figure, and we do that. Both sides adds up to 1700, and that's that's what's known as balancing the accounts. If you ever wondered about that before, well, now you know. But what's important is this balance brought down is on the credit side. That means it's a minus figure. It's a bank overdraft, and that matches. Insert a shape. We'll insert here. And that matches the adjusted bank statement balance. And when the two of them match, we know we've finished our reconciliation, and that's it. There's our adjusted bank statement part C, there's part B, and there is part A. So I hope that was useful, and thanks for watching.